Today, ladies and gentlemen, it is that time of the week where I share with you the stocks about the stocks I sold in my $200,000 Canadian stock portfolio on that path to independence to perhaps one day retire early as I generate that juicy passive income. And there's some controversy going on in my portfolio because I sold some stocks that I know some of you aren't going to agree with, but I'll explain my decision making around this because I've been really fixated on growth as of recently because I believe there's some good value in the tech industry. Many of you know I've been buying Google and I have been buying a lot of it, but look at tech this week. I mean, in the beginning of 2024 continues to be the conversation of choice. Apple gets downgraded, then it gets upgraded. I'm not a big fan of Apple to current values with the growth rates, but I'm not buying Apple. I am getting exposure through the S&P 500. And keep in mind, anytime I buy an individual stock, I always buy some S&P in tandem because, again, that kind of mitigates some of the risk. But look at NVIDIA here, man. Those politicians that have been gobbling up those calls and those shares, they've been crushing it. NVIDIA's earnings are going to be fascinating. So pay attention because I'm going to reveal the earnings calendar at the end of this video to what you should be paying attention to because a lot of tech's coming out in the next week or two. But we got Tesla tanking, and that is on my buy list as well. I have not bought Tesla yet. I'll also break down when I plan on buying Tesla because I think it's heading into a very interesting place. But again, the rest of the market is still lacklustering at best. And I've mentioned that's going to continue until we get into an interest rate cut cycle because that's what's going to support most of the bottom half of the market. But we can see in my portfolio specifically here, what I've done is I've sold my HBank ETF. I didn't have a lot, calmed down, a very small position in the portfolio. And why did I sell the HBNK, that wonderful equal weight bank ETF on the Canadian side of the border? Because I wanted Google. I wanted more S&P 500. I think there's a lot more potential growth in the near term and the long term when it comes to Google. I'm going to break down why, and I'm also going to explain to you when I'm going to be buying my bank stocks back because I am, and I promise you that. And it really just kind of concludes down to some short-term speculation on Google earnings. But still, we can see Google right now is making up about 6.2% of the portfolio. I have about 13,000 CAD, 68 shares roughly, and it's a bit more than that because the Google and the Goog shares that sit in my VOO make up about 3.8%. And if you kind of convert that over with my Google shares as it is, the entirety of the portfolio would comprises of about just over 8.5% of Google. Now I want to get that to about 10% respectively because let me break this down real briefly. Now Google stock I think has a lot more recovery left in it. It is the only S&P that should be trading at a 30 times multiple and isn't. So anything I think around 27 or under was the best buying opportunity, and that's where I really accumulated a lot of those shares, and there's still a bit more I'm going to be buying, but Google's going to have earnings coming up in the next 2 weeks. And I really think Google's going to see quite a surprise on those earnings. But let me break down some stats here because I don't think people appreciate the dominance of Google search. First and foremost, Apple in the lawsuit of the monopolistic behavior with them and Google, Google's been paying them a commission to basically be the primary default search browser on your Apple iPhone. Apple has thought about competing with Google on that aspect and making their own search browser, but they were so scared at losing because Google has such a dominant brand that it would only hurt Apple in the long run, so they'd rather collect commission and work with Google than try and compete with Google. And we can see that when you look at how much of a monopolistic thing Google truly is from a search dominant standpoint, right? And then you take a look at some statistics on their basic businesses like Gmail. Gmail dominates about 30% of the global email world, and they got about 53% market share just in the US alone. Forget Gmail, look at YouTube statistics. I said YouTube is the dominant streaming platform globally. Forget Netflix, forget Disney. They all have to pump out huge dollars. YouTube is making billion-dollar brands like Mr. Beast, and it is just a ridiculous asset, I think, for Google. When YouTube has more than 2.7 billion active users in 2024, YouTube Premium has 80 million active users worldwide. They've been patenting down on people trying to use ad block. They've been limiting people's browsers. I went through that experience. I'm sure many of you have as well. I'm not going to get into that right now. Maybe on the stream on Sunday. Subscribe for my live stream here. But 52% of internet users access YouTube at least once a month. 52% of internet users. Crazy that is. I don't even think globally Netflix has even close to those kind of users. YouTube gets around 113 billion visits each month. YouTube generates 22. I know YouTube generating a lot of income. We can talk about that on the earnings cycle. India has the most users. We'll just leave it at that. You get the idea, right? But when we take a look at earnings, unlike Meta that really had a great recovery in their earnings, cutting a lot of costs, Google's been going back into that phase because we've known that the stock price charts are following these earnings per share. We went from a place of people only cared about revenue growth to a place when interest rates came into play and a lot of speculation and a lot of fear of growth. People only cared about a bottom line. So tech companies having the malleability of not having as much debt on their balance sheet have been really able to manipulate, their earnings to try and get them to go back up, right? And I think Google, the margins are great. They have a lot of room to continue to grow this EPS, and I'm expecting a very great quarter out of this. And it's the holiday quarter. E-commerce is dominating, and e-commerce drives a lot of ad revenue for Google. So I'm very anticipating that in the next 2 weeks, Google's going to have a nice earnings, and I want to be a part of that because I don't think we start going backwards from here. So that's why I've been just desperately buying as much Google as I can to fill out the position to be, again, somewhere between 8 to 10. I'm trying to get closer to 10% of the entire portfolio. And as mentioned, I don't want to own a huge diverse portfolio. I use the ETFs for that. I think I can get growth, dominance, and outperformance by just hand selecting what I think the best companies are, leading us into the second one, which is going to be Tesla stock. You're seeing a lot of YouTubers right now buy Tesla, and I think they get the long-term vision. We can speculate on what that long-term vision is, but Tesla has a big problem right now, and that is their EPS growth in a time where that's all people care about. The stock is likely to follow this, and I'm anticipating with a lot of the slump in margin and price cutting and the slump within the basic auto sales that have been going on since the interest raise cycle, that selling cars right now is super hard. And I believe software is the future. Software is where the margin is, software is where the money is, and I think Tesla's becoming a software company, but they're not there yet. They are primarily a business selling products and services like Apple, and we see how that's hindering companies like Apple. We see how it's hindering companies like Tesla, and in the short term, I don't think they're the best buying opportunity. In the long run, I think they're a good buying opportunity. In the short run, I think we're going to see some continued pain because without that growth kind of propelling the company, there's going to be some fear, right? I mean, Tesla's got to work on getting their revenue up. Could you imagine where Tesla's revenue would have been if it wasn't for the price cuts? And we can argue, what companies are going to do well. Is Tesla going to dominate? In my personal opinion, my speculative opinion, Tesla, the branding power of this company is very similar to where Apple was back in the day when they were competing against BlackBerry and Samsung and these other phone companies, and they had kind of equal market share, and people were like, oh, no one's ever going to want to fully use iPhones. But the pure branding power of these companies and the pure ability to innovate and be a marvel, I think perpetuates into a whole new generation of growth. It's like YouTube. I mean, again, go back to YouTube as an example. Go ask kids what they want to be when they grow up. Most of them today will say they want to be a YouTuber. Most of them are not saying they want to go to Hollywood or work for Netflix. No, they're saying they want to be YouTubers. And I think that's the same thing in the car market, is the vast majority of people and kids are fascinated by Teslas, right? And I think Tesla's going to continue to dominate as they become basically, the Model Y is the best selling car globally right now. I think that trend is going to continue, but for right now, there's too much pain in the auto market, and Elon is causing too much controversy over his share ownership. And I honestly think that's not as big of a deal as people make it out to be, because it'll just go back to milestone expectations. You complete the milestone, you get Tesla somewhere. Hey, you're going to get more shares. It's going to dilute the shareholders. That's basically how the dude became a billionaire, and that's probably what they're going to do to continue to keep him on as a shareholder. But that causes a lot of controversy in the stock. So I think Tesla stock is likely to go back down into the 100s. I told you guys once we get into the 100, that's where I would start accumulating shares again. And I've been very, very patient with this because I recognize the hype that's built into the company, and hype can't justify earnings and revenue. So I believe Tesla is going to become one of the largest, most dominated auto companies in the world. And the cherry on top of the cake is going to be obviously self-driving and robotics. But in the meantime, I still think their base business, from charging networks to just the cars to the trucks to the fleets they're going to be building out in the next 10 or 20 years, is going to have an insane value for this company that I think will get them into the trillions. So if we can get it back to about a $500 billion market cap, I think the value that's going to provide to me in the long term will be that growth potential I want. Now, when it comes to the banks, specifically here, Bank of Nova Scotia, I'm going to use as an example. I have been speculating that the banks are largely undervalued. Yet recently, the government has started to mitigate some laws because of their deficits to start taking more money from the banks. They're increasing the corporate tax rates. They're getting rid of some of the nefarious practices, which I can agree with when it comes to obviously NSF charges. How do you go negative balance in a checking account or a savings account? It's like a credit card. It shouldn't be able to go negative. But they do all these nefarious things, and I get that. But when it comes to the tax rates and stuff, I think that's a little overbearing, considering they're only charging it to the financial sector, and that is going to hinder, and it is going to hinder a lot of the earnings growth into the future. However, I think the next potential upside for these banks, like Bank of Nova Scotia, isn't going to be just from them being hindered from extra tax rates. It's going to basically come from loan loss provisions as they start to implement back on how much they have to put aside to keep up with the regulatory environment and the less credit quality mortgages and loans they have out there because of the interest payments that people are making, right? I don't think we're going to see a financial collapse. That's the risk with the banks. If mortgages collapse, I don't see that coming. That's the risk. but I'm not too worried about that. That's the speculative game you're playing here with these banks. So you just have to ask yourself, do you believe in the Canadian real estate market or do you not? If you don't believe in it and you think, the real estate's going to collapse, then don't buy the banks. It's as simple as that. But the fact is they're putting, like, for Bank of Nova Scotia put $1.2 billion in the last quarter for loan loss provisions. That took away $1.2 billion in their net income, right? So they only ended up putting away $1.38 billion. Now, there's always some room for loan losses. They're always putting a bit aside here and there. You never know what defaults are going to come into play. So let's just presume that they were, if they can even put an extra 500 to $1 billion away to the bottom line, I think there's going to be about 30 to 50% potential upside from here, which is going to eventually hit their earnings per share, which has been absolutely abysmal because of these loan losses, right? So if we take a look at Bank of Nova Scotia and you take a look at those earnings, again, this stock is following the earnings chart, and loan losses and higher interest rates have got us down to where we are today. And I think we're going to start seeing the bottoming here, which means we're going to start to get back to the upside. And because I think once we're done with loan loss provisions, there'll be about again, I think at the minimum, at least a 20% upside, but realistically, I would take the middle ground between 30 and 40, which would take Bank of Nova Scotia somewhere between, I'm going to say 75 and about 85 a share. So I think we're going to, again, that's representing about 20 to 30% modestly to the upside. And I think that's a more nominal place for where Bank of Nova Scotia should be. So if you're looking for near-term return, and again, the reason I sold the banks is because Google's going to be posting earnings in the next couple weeks, whereas these banks do not post till the end of February. I will be buying them back before the end of February because I'm going to be pulling some money out of my, out of my corporate account that I'll be putting in my tax-free savings account where I'll be buying these banks, because your full rate of return is really just going to come from the dividend, and then you can just expect some near-term upside. But after that near-term upside comes into play when earnings recover, I think that's the end of the bank recovery to a realistic extent, and I think the long-term growth potential is really going to start to get hindered, because I have some intuition that the population growth might start to stagnate to some degree in the coming 5 years because of the expense that comes to living in Canada. I think Canada's reputation is starting to go downhill, and I think that's going to start to hinder some of the growth potential. But still, I think there's good growth and there's good rates of return just in the dividend. It's just not going to give you the same rate of return that Google is, which is why I'd much rather in the near term fixate on Google's discount, in my humble opinion, get some of that short-term potential upside, and then get that long-term growth that comes with those tech companies. But we were really going to want to pay attention to earnings here, and whether you agree with me or not, you can let me know in the comment section below. But I'm very excited to see what earnings come out this week, because we're getting a lot of pivotal ones in the dividend world from Verizon and 3M come up Tuesday. We're getting Tesla on Wednesday, which is going to be really pivotal. And unless Tesla comes out with a cheaper model car or some other vehicle or something else that can hype the stock, I'm hoping we get back down into the 100 range, where I think Tesla fairly is deserved to be for the current time being, where I will start to accumulate shares, which will come into play, and you can subscribe for those updates. We'll see what happens. We're getting some airlines posting, Visa, Intel. We're getting into some of those chip players. Even Procter & Gamble is going to be posting. So I'll be breaking down a lot of these earnings, and if that's something that you look forward to, consider subscribing for those updates. But I really recommend that you join me on my live stream coming up Sunday, where we're going to recap a lot of what's been going on in the market this week. And yeah, my portfolio has definitely been evolving here, folks, and I'd just love to know what you think. So stay cool, stay awesome, and as always, I look forward to catching you in the next one.